Finance can be defined as the application of the principles of finance economics to an interrelated set of monetary problems.
Current ratio, a liquidity ratio that measures a company's ability to pay short-term obligation or those due within 1 year. To calculate the current ratio, current asset divide current liability, that is 4,400,000 divided by 2,200,000 equal to current ratio 2 times. Current ratio is 2 times and industry average is 2.1 times. Quick ratio, an indicator of a company's short-term liquidity position and measure a company's ability to meet its short-term obligation with its most liquid asset. To calculate the quick ratio, current asset 4,400,000 minus inventory 1,310,000 and minus expenses 490,000. Divide current liability 2,200,000 equal to quick ratio 1.18 times and industry average 0.9 times.
Next is efficiency ratio. Efficiency ratio assesses a company's capacity to produce revenue from its asset. There are 4 methods. First, inventory turnover. The frequency at which inventory is sold, utilized and replaced is known as inventory turnover. The formula is cost of goods sold divided by the average of closing inventory. So, based on the slide, we get 7.5 times, which is good compared to industry average. To improve inventory turnover, Hikmat Bati Berhad can do proper forecasting and effective marketing. Second is average collection period. Average collection period is an accounting statistic that shows the average number of days between the date of a credit sale and the date of payment by the purchaser. The formula is account receivable divided by annual credit sales divided by 360. Based on the slide, we get 40 days, which is poor compared to the industry average. To improve, we can do a reminder to always be up to date about the payment and adopt a tighter collection policy. Third, non-current asset turnover. The ratio of non-current asset turnover to current asset turnover is referred to as management efficiency. The formula is sales divided by net non-current assets. Based on the slide, we get 2.5 times, which is good compared to industry average. To improve the non-current asset turnover, we can increase revenue and sell the assets. Lastly, asset turnover ratio. The asset turnover ratio evaluates a company's assets' ability to generate revenue or sales. The formula is sales divided by total sales. Based on the slide, we get 1.52 times, which is poor compared to industry average. To improve the total assets turnover, we can improve inventory management and computerize inventory and order systems.
Now, I'll present about leverage ratio. Leverage ratio is used to measure the level of debt or borrowings in firm. They tell us whether the company uses more debt financing to finance its assets and operations as compared to equity financing. It also highlights the ability of the firm to honor its medium and long-term debt commitments in terms of repayment of the principal as well as the interest charges. There are 3 ratios in leverage ratio. The first ratio is debt ratio. Debt ratio measures the extent to which an organization uses debt to fund its operations. They can also be used to study an entity's ability to pay for that debt. Here is the calculation of debt ratio. Total debt divided by total assets, and the answer is 30.36%. Based on this calculation, Hikmat Bati Berhad has lower borrowings than other companies in the industry, which is good for the firm to compare with industry average, which have 40% of debt ratio. To improve debt ratio, companies can make proper management of inventory and increase sales. It can be used to lower the debt proportion and improve the debt ratio. The second ratio is debt to equity ratio. It is used to compare a company's total liabilities to its shareholder equity. It can also be used to evaluate how much leverage a company is using. Here is the calculation of debt to equity ratio. Total debt divided by total equity, and the answer is 58.62%. Based on this calculation, Hikmat Bati Berhad only used 58.62% of loans, which is a good for their company compared to its competitors in the industry, which use 60% of loans. To improve this ratio, the firm can increase their profitability and restructure debt. The last ratio is times interest and ratio. It is used to measure a company's ability to continue to service its debt. The high ratio means that a company is able to meet its interest obligations. Here is the calculation of times interest and ratio. Earnings before interest and tax divided by interest expenses, and the answer is 6.67 times. It means that the times interest earned for Hikmat Bati Berhad is not good compared to industry average, which have 7 times interest earned. To improve the time interest earned ratio, company can pay down debt and increase earnings.
Next, I will tell you about purpose of profitability ratio. Profitability ratio are a type of financial indicator that assesses a company's ability to create earning compared to its sale, operational cost, balance sheet asset or shareholder equity over time using data from single point in time. Firstly, purpose of gross profit margin. The gross profit margin is an analytical statistic that calculated by subtracting a company net sale from its cost of goods sold. For the formula, gross profit margin is gross profit over sale and we got 42.24%. Hima Bati Berhad gross profit margin is 42.24%, which is higher than the industry average is of 38%. As a result, Hikmah Bati Berhad perform is commendable. For improvement, we can increase our gross profit margin by lowering our cost product so without affecting our selling price. A reduction in cost of product so will result in increase in cost of profit margin. Secondly, purpose of operating profit margin. The operating profit margin calculate how much profit corporation generate on the dollar of sale after deducting variable production expense such as salary, raw material, but before deducting interest and tax. For the formula, operating profit margin is earning before interest and tax divided by sale and we got 40%. Hikmah Bati Berhad operating profit margin is 40.1%, which is lower than our industry average of 80%. As a result, Hikmah Berhad performance is poor. We can improve the operating margin by better management control, more efficient resource utilization, better pricing and more effective marketing. Thirdly, purpose is net profit margin. The net profit margin expresses how much net income is earned as percentage of the total revenue. For the formula, net profit margin is net income available to common stockholder divided by sale and we got 8.70%. Hikmah Bati Berhad net profit margin is 8.70%, which is higher than industry average of 8%. As a result, Hikmah Bati Berhad performance is commendable. For improvement, we can raise our net profit margin by increasing revenue such as by selling more goods or services by rising prices. Fourthly, purpose of return on asset. Return on asset is a profit ratio that shows how much profit corporation can make from its asset. For the formula, return on asset is net income available to common stockholder over total asset and we got 12.41%. Hikmah Bati Berhad return on asset is a 12.41%, which is higher than industry average of 12%. As a result, Hikmah Bati Berhad performance is commendable. We can improve the efficiency of present asset to increase the return on asset. Currently, asset include cash, receivable and inventories. Fifthly, purpose of return on equity. Return on equity is calculated by dividing a company net income by its shareholder equity. For the formula, return on equity is net income available to stockholder divided by common equity and we got 23.97%. Hikmah Bati Berhad return on equity is 23.97%, which is higher than the industry average of 20%. As a result, Hikmah Bati Berhad performance is commendable or good. We can boost asset turnover to improve return on equity. The turnover of asset is measure of a company efficiency.
Marketability ratios are recruited in determining the current share price of a publicly traded company stock. Current and potential investors use these ratios to determine whether the company's shares are overpriced or underpriced.
Earning per share. To get total earning per share, net income available to common stockholder divided by number of ordinary share, then get 0.35 cent. So earning per share of Hikmah Bati Berhad good than industry average, which is 0.28. To improve the ratio, Hikmah Bati Berhad need to boost their earning and reducing the number of outstanding stock. Dividend per share. To get dividend per share, ordinary share divided by number of ordinary share, then get 15 cent. Regarding to Hikmah Bati Berhad, company is paying 50 cent dividend. To improve the ratio, reduce the number of share on issues and increase quantity of dividend issues. Dividend payout ratio. To get total of dividend payout ratio, dividend per share divided by earnings per share, then we get 43% of dividend payout ratio. Based on the ratio, Hikmah Bati Berhad get higher ratio than industry average. To improve the ratio, Hikmah Bati Berhad need to increase in company's net income and doing well on cash flow. To get greater opportunity to pay bigger dividend to shareholders. Price earning ratio. To get amount of this ratio, market price per share divided by earning per share, then will get 6.56 times of price earning ratio. Based on the calculated ratio, the lower price earning ratio of this company shows that the time express a lower level of optimism about future of this business. To improve this ratio, Hikmah Bati Berhad must increase market valuation of such profit and increase the dividend.
Dividend yield. The formula of this ratio is latest annual dividend divided by current market share price and then get 4.41%. To improve this ratio, need to increase company's net earning from dividend are profit.